Hey guys, so thanks for joining. Today I'm going to talk about digital identity and security in financial services. And I mean, there's a wide range of identity and security solutions that are required in the financial services space. And, all of us have bank accounts. We all know, at some points in time, we have had issues with our bank accounts, and sometimes because of phishing, quite a bit of money has been stolen. Uh, Today, what I'm going to talk about is a very interesting case study, which is related to what is called digital banks. And this is a hot topic currently, especially in Singapore and some of the neighboring countries. And so we look at identity and security in financial services as it relates to digital banks. So, as you know, with the COVID-19 and before that, many countries in the world, there were a lot of new digital banks coming up. And as you can see from this world map, USA has new digital banks, which are in UK sometimes called challenger banks. That means they're challenging the existing banking banks that are there, been there for 100 odd years. So you have lots of digital banks springing up all over the world, and Korea, Germany, UK, USA. There are many names that you might recognize here, and these digital banks, basically the business model is they operate purely digitally on your mobile phone or on the internet, and help you with your financial services. So it's a growing trend. This is now coming to Asia, and if you see the Asian regional trend, some of you may have seen these notes. The Straits Times, has run an article about Monetary Authority of Singapore, which is going to issue 5 digital bank licenses, and 21 bidders have bid for this. Malaysia is also going to issue 5. Hong Kong has already issued 8 digital bank licenses, and the digital bank in Philippines has just gone live. And so there are many such digital banks that are coming up all over the region. Some of the business models are very interesting. If you see the challenger banks, you will see that in UK, for example, Tandem Bank is one of the challenger banks, where they offering some very special products. And of course, there is N26 in Germany, and so forth. So they are challenging the existing banks, but there are some very niche challenger bank models, such as investment only kind of, like Wealthfront or Wealthsimple. These are very special internet investment banks, payment banks, and so forth. So a wide range of business models exist, and one of the key things that you will see in these digital banks is that we have some very key components that are required to run a digital bank. Just like the previous speakers shared on the OT kind of a model. So these are some of the operational building blocks or the Lego blocks that you need to set up a digital bank. And those include, you need a digital app or on your internet. You need security. You need identity. You need electronic documentation, because in the old days you fill out a loan application form and give it to the branch manager. Now electronically you need to have that document delivered to your phone and sign it and send it off. And then of course you have the the usual contact center, because in a digital bank there is no physical branch to go to, so you have to call people, and then of course there are SMS and alerts. And the heart of the digital bank is a core banking system, which is where your accounts sit, your savings account, current accounts, time deposits, loans, all that sit there. And then you have other ancillary systems. If you issue cards, then you have cards. You have reconciliation and clearing, which is systems which require you to make sure that whatever you've done in the app is monitored and cleared. And then you have risk, fraud reporting, and governance. So one of the most important things in a digital bank is, because it works purely on the internet or on your mobile phone, you need to make sure that you have really good security. And the other thing that you have to worry about is, how do you onboard customers onto your digital bank? How do you know that the guy who is signing up for your account in your bank is the guy who is saying that he is? And so the key focus area in a digital bank is what is called as digital identity and security. And that's where the concept of what is called as strong customer authentication comes up. And that's very important, because you really need to know the consumer that is signing up for your digital bank, what kind of a customer he is, who he is, where is he from, and so forth. And so this is a main focus area for digital banks, is how do you make sure that you have authenticated your customer in the right way. So I'll just focus on the three main areas where strong customer authentication is very useful. And some of the fintechs, I've given some sample fintech that we work with to provide that strong customer authentication. And Target, Cover, and Hyperverge are some of the solutions that we'll discuss. So going to the next slide, the main question that you have to answer when you're looking at strong customer authentication is, when you onboard this customer from the internet, from your mobile app, is he the correct person? And for that, we look at biometrics. Is he using the device which it belongs to him? So device authentication is a major issue. And which location are you using your phone, and which part of the world? You obviously can log in, let's say, from Singapore, but in 2 hours you cannot log in from, say, the west coast of the United States. So geolocation plays a big role in your journey on securing your customers. So how do we go about this? And so if you look at the typical model that is being followed by most of the financial institutions, is what they ask you to do is to scan your ID, the first step. Then you take a selfie to match your photo with your ID. And you also do what is called as a liveness check. That means, the person who's taking the selfie, it's not a photograph behind it. You shake your head or blink your eyes to make sure that there's a live person behind that selfie. That's the biometric part. And then we look at the device part, where we take the credentials of the customer and then we store it in a very secure area on your device. And that's where, it can be a mobile device, or, if looking at IoT in the future, you can look at other devices where you can store credentials in a secure manner. And then you confirm that customer. So this process to secure your customers is done through this SCA. But there is one more step that is required, and that is to secure this in your phone. You need to have a really robust way to secure this, because your phones can be hacked. Apps can be hacked. There's many ways. Phishing can happen. So how do you secure that? And for that, I will talk about what is called as multi-factor authentication. So when you are using the bank's app, on the left side below, you will look at doing all kinds of transactions with your mobile banking app, your e-wallets, your funds transfers, and so forth, investments, lending. So you will look at all kinds of transactions on your mobile phone, and your mobile phone is connected to your bank, and that's your primary channel of communication. But when you're looking at multi-factor authentication, you need to now secure those credentials in your phone for authenticating yourself and the transactions that you do on the phone. And for that reason, what the latest trend in this whole area is opening up a secondary channel where you have secure keys, both public PKI, which is public key infrastructure, and private keys. And you have what is called as a secondary channel of communication. Make sure that your credentials, even if they are compromised in the primary channel, they are secure in the secondary channel. And that is the reason why a lot of banks are now adopting this multi-factor authentication standard, where you can securely do stuff for your transactions on the phone. Now, the reason for this is because using the secondary channel, you can take those keys and look at it, simply like a bank, safe deposit locker, where you always need multiple keys to open the locker. When you go and put your money in a safe deposit vault or a safe deposit locker, you always have two keys. So this is the whole concept here, is that you have the bank key, you have a security key, which is from the secondary channel, and then you have the phone services can be unlocked if all the keys are in synchronous. And if they are in sync, then the phone services can be unlocked. Otherwise, people will not be able to access your phone services unless they have all the keys in this whole chain. And so that's the purpose behind that. And quickly, this can be activated for a whole range of banks and their customers. And so this becomes a multi-factor authentication platform for multi-bank use. So how does that help you and me? With the strong customer authentication, you don't need to remember your username, passwords, OTPs. You just use your app and just use your Face ID or your fingerprint ID, and you can authenticate yourself for any service or any utilities or government related stuff. And then you can authorize payment, whether it's shopping or on the ATM or anywhere you're doing point of sale, buying coffee. You can authorize payment with just your Face ID, your fingerprint, and as a backup, you can have a PIN code. So with that, I kind of close this discussion. Happy to take any questions.